Hello everyone, I am Michael Mruger. I am the managing partner of Greenbush Financial Group. Today I'm going to be going over the topic that's dominating news headlines right now, which is the Russia invasion of Ukraine and the potential impact of the stock market both now and after this event has concluded, because it creates a lot of uncertainty around the price of oil, inflation. Does it increase the likelihood of a recession either in Europe or in the US? So we're going to be covering a lot of ground, and we purposely have not put out a video up to this point because when there's major geopolitical events, there's just too many possible outcomes to really start narrowing down out of the gates what could happen. But now that we're a few weeks into this, we are starting to get some front runners as far as possible outcomes for the markets that I'm going to be sharing with you today. When we look at the possible outcomes associated with the invasion itself, well, it could be possible that the Ukrainians could successfully defend their country and repel those Russian forces. It seems like at this point, the higher probability of outcome is just based on the willpower of Putin and their military might of Russia, that they will continue to attack Ukraine until they have successfully overthrown their government. And it does seem unlikely that Putin is just going to change his mind at this point, even in light of these sanctions, and decide to retreat back to Russia empty-handed. So it becomes more about the timeline. Does the violence continue for the next few weeks? Or does it continue for the next few months? Because the reality is the longer the violence continues, the more risk there is to the overall global economy because there's just more possible outcomes. Oil prices stay higher for longer, which again pushes inflation higher in the short term and potential longer term. There's disruption to the consumer. People may be buying less, import exports. So we really just have to watch the timeline. One of the greatest risks to the market associated with this event is the rapid rise in the price of oil. So a barrel of oil at the beginning of the year was about $75 per barrel. It has now risen to $110 per barrel as of March 3rd and is continuing to rise because Russia is a major oil producer and this conflict has created supply disruption. But this creates a much bigger risk to the Eurozone economies than it does to the US, because the Eurozone imports about 40% of its oil and natural gas directly from Russia, where we are much less dependent and we're much more reliant on our domestic supply. Where this really poses a risk to the US economy is higher oil prices usually lead to higher inflation, because if goods need to be transported from the ports into stores and put on trucks, that's gasoline raising the demand for oil. We're about to enter the travel season of the summer, so people traveling, flying, that's a demand for oil. So we look at like demand going up at the same time prices going up, and we kind of had inflation issues before we even entered into this Russia-Ukraine global situation. So again, this is where timeline matters. If it goes on for months and oil prices stay at these very elevated levels for months, I think there could be more of a residual impact in the second half of the year versus if we have a shorter timeline and then the oil prices start coming down and the global economy starts to recover, that could have a more positive outcome. If oil does stay at these heightened levels for a prolonged period of time, I would not underestimate the power of government to step in with either fiscal or monetary stimulus to help the Eurozone countries and the US countries get to the other side while they're waiting for the price of oil to come down. So there could be help. We are already starting to see the shift in US monetary policy to these global events. Jay Powell came out yesterday with language basically firming up for the market that they intend to only hike a quarter point in March. And the market's been trying to decide, because we've had inflation, whether the Fed's going to move a half point or a quarter point in March. Just acknowledging the risk and the uncertainty of the economy, it stretches out that Fed timeline. And the market rallied yesterday in that news, realizing that higher rates may be bumped out further than expected. We're already starting to look at what the market behavior could be coming out of this Russia-Ukraine event. Now, we never got our reopening trade rally that we were expecting coming out of January. In January, Omicron variants were peaking. They were then starting to come down sharply, but then we stepped right into the Russia-Ukraine event, which created all that market volatility. So once that Russia-Ukraine event is resolved, you may see the markets return its attention to the strength of the U.S. economy, the strength of the U.S. consumer that has jobs, higher wages, has a will to spend, and you could get that relief rally, but it's just been delayed. We also find that people are dramatically underestimating the power of these sanctions that have been put on Russia by all these NATO countries. So Russia has been severed financially from the world. Their people are lining up at banks. Their stock market has crashed. There's bond defaults. Like every day this continues, it creates intense pain for the people of Russia, which also puts more pressure on Putin, because if this goes on too long, you could have their own people rising up against him, which is a possible scenario. But we also had to ask the question, is there going to be some type of global contagion from the Russia stock market crashing, their bond market crashing, because it creates like the domino effect like we saw in 08-09. And at this point, we don't foresee that happening, mainly because the Russian stock market is not that large. It's about $900 billion, which sounds like a lot, but it's basically the market cap of Tesla. That's the whole Russian stock market. So most of the stock market is closed there, but for any stocks that have traded, a lot of them are down 90-95%. This is the amount of pain, the amount of economic pain that Russia's feeling right now. Also, for the bond side of things, you could see a wave of defaults on this debt issued by Russia, because they can't even issue dividend payments or principal payments out of the country, even if they wanted to, because they've been severed, again, financially from the global economy. So it could take, decades for Russia to recover from all these sanctions. And even if the events conclude themselves and they have occupied Ukraine, who's to say NATO will lift those sanctions? I've also received a number of questions about China's role in this. So the question becomes, is China watching all this, and could they essentially do the same thing in Taiwan because they want to grab a big piece of the semiconductor market? I remind people that China's in this for the long game. China makes decisions now that are really setting themselves up for growth for 5, 10, 15, 20 years down the road. And they're watching what's happening to Russia and how their economy is just being completely destroyed right now by those sanctions. And they would probably prompt something similar if they were to take the similar action against Taiwan. So knowing that China's a long player and watching this go on right now, I think it's a deterrent for them. Also, the exports. So they export very little to Russia compared to the amount of exports they send to the US. And if they were to upset the US and we were to shut off those exports, it would harm them dramatically. I think it's very important for investors to remind themselves that they have to be very careful about filtering information during these big geopolitical events. The doomsdayers come out of the woodwork, and that's normally what gets the attention. The stories about Russia potentially cyber attacking the US, bringing down our banking system. What if he attacks a NATO country and then just drags us into this big global conflict? Any of those things could happen, but you have to place a probability of them happening, which even right now seems low. Putin's got his hands full with Ukraine. What are the chances he's going to want to invite the full might of NATO upon him right now, which could unravel all of his plans? In summary, this is a very fluid event, and we're getting new information every day as to how this is going to play out. We just have to pay attention to the data and really assess the risks that the data come at us, especially with regard to oil prices and inflation here in the US, what the policymakers' responses potentially will be to those risks. But we're already starting to see some resiliencies in the market, and it's really important not to lose focus as to what comes next, as opposed to just being inundated by all the negative information that we're seeing today. If you have any questions, please feel free to reach out to me at moneysmartboard.com. Thank you.